Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. I hope that you had a very productive, very good first full week of the year. Yeah, I mean, it's crazy if you think about it. We are already almost a quarter into January, which is absolutely crazy, but that's the world we live in. So time's flying. I guess when you become a bit older, family man, it's really true what they say. Your best years feel that they are flying by. In any case, let's move ahead. If you do enjoy the content, please consider dropping that like and subscribe. As you know, it's the only thing that I ask you. And we've reached 850 subs, so thank you very much for your effort. The last Jim Cramer video was very well received, and I really appreciate the support of all of you. Now, let's recap the week. Stocks ended up pretty much flat, a little bit closer to a little bit green across the board, with the exception of the Russell. S&P is slightly below 4,700. We are about 100 points away from an all-time high closing that we had in January 4th, 2022. Of course, the Nasdaq 100 and the Dow Jones already hit their new all-time highs. But in any case, stocks remain volatile. Why? Because the bond market remains volatile to down. Very simple, same dynamics. In case you guys haven't noticed, in the quarter 4 of 2023, the United States increased its debt massively. I think close to $1 trillion in a quarter. To put things a bit into perspective, it took the United States from 1776 to 1984 or something to reach its first $1 trillion in debt. And we've just replicated that in 3 months. Now, since the the debt creation kind of staled, then bonds start to sell off. You see, we need the way that the monetary system that we have works is we need to keep producing new debt into the system. And of course, that debt is intended to never be repaid because that actually crashes the system. That's not the point. So the idea is always the end game, if you will, is to basically inflate the currency. And the hope is that technology improves our lives enough for people who cannot have assets that basically keep up with this inflation, don't throw riots. Basically, that's the grand scheme of things. I think I will elaborate this on Sunday, as I typically do on Sundays, a kind of a more macroeconomic view. In any case, looking back to the market, Bitcoin is pretty much back to 44,000. So this is what I mean, right? So Bitcoin crashed, and all of a sudden, the same guys, oh my God, the rally is canceled, the bull market is delayed. Look, we were waiting for this, with the interest rates going up, blah, blah, blah. You see, this is the issue, is we are entering a year of a lot of volatility. And the asset class with more volatility than the normal asset classes is crypto. So if people are going to throw up their pennies into a bunch and throw the babies into the air and do all of kind of stuff every time we go down 5%, then these people are going to, have a health problem by the end of the cycle. It's really that simple. Now, you may recall that I was here sitting and say, yeah, there's a pullback. I don't see anything wrong with it. We should still be on pace for the end of the month to be above 45,000. And all the other channels were telling you how we're about to crash and the end is here and the bull market is now canceled, blah, 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 all of this kind of stuff that obviously did not happen. And this is the point. And this is also something that I should raise your awareness about. You see, a lot of people missed the 15,000 to 44,000 move on Bitcoin, which is about a 300% move. So what do? They try to compensate that by adding leverage to their long position. So they buy Bitcoin, but they don't buy it on spot, just one Bitcoin. They buy it 10x leverage, 20x leverage. The idea is to make up for the time they lost because they didn't want to buy Bitcoin at 15. You remember what I've said this many times. They don't want to buy Bitcoin at 15. They want to buy it at 45 and 50, basically. So they go long on leverage. If you are 20x leverage, if Bitcoin goes down 5%, 5 times 20, that's 100%, you lose everything. So a lot of people got liquidated when we went to 45,000. People opened longs with 20x, 50x leverage. And at that point, we have a big sell-off during a short period of time. All these longs get liquidated, which basically that's why when you see the chart, when the chart goes like this and there's like this week, that means a lot of people's longs got liquidated. And by the way, that means a lot of people lost their life savings, in case you guys don't know. But then, as we are moving down, and the bearish narrative started to pop up, this is the end, blah, 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 all of this, they open, or people that are always trying to trade, they try to chase the move down, and basically they open shorts on leverage as it's going down. And then Bitcoin bounces up and it takes out all these guys on the way up. My point is, this is what happens when you try to trade, and particularly trade on leverage, these kind of asset classes. And I don't care how many people sell you stuff. I don't care what people promise you in terms of returns. Look, yes, if we are in full-fledged bear market, in the euphoric moves, I mean, if you want to go with a little bit of, let's say a couple of $100 or euros or yens or whatever the currency you have, and put it a little bit on leverage, and if you lose it, it's one thing. But even that, I don't recommend. Because, first of all, I don't recommend anything. That's the number one. But number two is the 3 L's. Remember this. How do successful men go broke? Ladies, liquor, leverage. Said by Richard Hart. And this actually is quite true. It's amazing how many people have successful, stable lives and how well they would do if they would just understand the cycle. If they would just understand where we're heading and not try to front run and try to narrow it down to weeks. What have I said before? 2025 is what I'm looking at for altcoins. Bitcoin, maybe you don't get to 2025, maybe you get the top in 2024. The spot ETF throws some shade into, will the cycles repeat? Will the cycles not repeat after the cycle? Will we cut the cycle short, or will we have it a bit sooner, meaning the bulk of it in 2024 or not? The point is, I'm already positioned for all of that. So I really don't care if it's on 2024, if it's 2025. To me, that's all irrelevant. So that's why it's important to have your positions, in my opinion, before, when nobody wants to buy, when everybody's saying that crypto is a scam, when Jim Cramer is bearish. That's when you should, in my opinion, make your own research and allocate your capital to the assets that you think is going to do well. And then have an exit strategy for the scenario that you don't want to see, the scenario that you expect to see, and the scenario that you would absolutely love to see. Point is, if you're going to listen to these guys on YouTube, whose goal is to sell you stuff, private groups, discords, follow me for the next 10x coins, buy my course to know how to day trade these things, all of that, if you think about it, let's take the course one as an example. If you can day trade with leverage, crypto, which goes up hundreds of percent during the bull market in like a week, then why are you selling a course for $300? Those $300 you should be able to make in 10 seconds almost. So why are you doing it? The answer is they are not successful traders. That's it. Because very few people are. So it's a little bit like, sure, do you want to have a strategy where the likelihood of you succeeding is very high? Or do you want to go for a strategy which has about the same odds of you making it making it into the NBA. That's your choice. I cannot tell you what to do. But the point is, this is just a clear example. You just saw it right in front of you. So people say, oh, give us a, let's see an example of some, say, this is a clear example of how day trading on leverage, this kind of stuff, gets you annihilated on the way up and on the way down and back to the way up. See, the person who bought Bitcoin at 20K, they don't care if it goes from 45 to 41 to 44. I mean, that's irrelevant. That's the point. Or, I mean, okay, if you miss the boat and you're trying to, kind of make it for lost ground, if you see drawdowns of 7, 10, 15%, maybe consider, adding over there and not at 45, 46 after a big move. But that's valid for any asset, right? In my opinion, you should buy the S&P when it pulls back 25%, not when it goes up, 30%, when it goes up 15% in a month. But that's me. In any case, guys, I wish you all a very nice weekend. Please drop that like and subscribe, and I'll catch you in the next one.